So my picture or whatever they call that thing when the video starts, this one, that's because this is attempt number 5 to do this live stream. And I apologize for that. I have no idea what's going on. Blame the internet. It's all Google's fault. Anyways, just kidding. It's not. In the end, we do these daily updates on this channel because we're trying to figure out what's going on in the world. Most specifically, we are trying to figure out what's going on with the consumer, right? Are they happy? Are they afraid? We're trying to figure that out. And then we try to follow the cost of capital. We do that because we are in the real estate business. And specifically as an investor, we want to know what the retail or, in buyer, owner occupant buyer is doing, because they are our largest competition, at least in my world, right? The first time home buyer, below the median, all that stuff. And then the cost of capital, because we are in a levered business and it's important to figure out what your cost of capital is, because cheaper capital, more cash flow. So today we are looking at some big numbers, at least in the realm of understanding what's going on. So retail sales. Retail sales, frankly, disappointed. They actually contracted. They were down 0.3% on an expectation of a growth of 0.2. So as I look at it, it was kind of a 0.5% miss, which in the economy our size is significant. I wanted to understand that a little bit better, so I dug in and tried to figure out where the miss was. And 3 places were highlighted: building materials, online purchases, and automobiles. Go to automobiles first. This one was interesting. First off, I thought the GM strike might be part of it, but then I remembered the strike really started in late September. Probably had zero impact on September numbers because I'm sure GM had plenty of cars already built and frankly shipped. So I would expect any draft from GM, not producing cars to happen in October. So, that's probably a big change. So we'll see if that trend continues. Online purchases is the one that really caught my attention. I remember a time 20 years ago where online purchases weren't even tracked. It was a rounding error at best. So now to see that online purchases are tracked and disappointed is interesting, because we've become a land of buying online, buying from your phone, all of that, and then building materials, right? All things that really, building materials is interesting because I attach building materials to jobs. Right, you're buying wood and framing and windows and roof shingles and all of that, and there's a contractor, there's a handyman, there's somebody doing work with those. So that could be, I see that as being a leading indicator for perhaps weak construction, but we will see. Just for comparison's sake, last September, retail sales were up 4.1%. So a significantly huge change, right? Positive 4.1 versus a negative 0.3, September on September. So that was pretty interesting. Going from there, looks like Mark Zandi, Zandi. He's the chief of Moody's, and he came out today and said, hey, there's a high likelihood of a global recession in the next 12 to 18 months. It's interesting. He's highlighting things we've been talking about, right? If you've been following this channel since our daily update started, which I think is 60 or 75 days ago, we've been hitting on these things, right? Is the trade war going to get to a resolution? Is the Brexit thing going to happen, right? Or is it going to be resolved or cause chaos? So the good news is we are watching the right things on this channel. So I was pleased to see that. The one thing that was really apparent in his opinion, again, Mark's opinion, is I don't really think he's calling a recession. I mean, I think he put it out there to get the people to click on it, right? I think it was clickbait. I think what he's really calling for is positive growth, but weak growth, like sub 1%. Again, he didn't say that. I was parsing his comments in the article. And again, I think he threw out this clickbaity title about a global recession to get, at least it worked on me. I clicked on it. So I thought that was interesting. Back to the trade war. I've been saying this since Friday, right? On Friday, I kind of hinted at, great headline grabbing, phase 1, small deal, all of that. But I think I said in the video, I was like, where are the details, right? What's really going to happen? And I'm like, well, maybe the powers that be, they'll do something over the weekend or whatever. Well, it's Tuesday, and I still haven't seen any specifics. I've seen promises. but I haven't seen anything collaborated. I don't know what word I'm looking for. Agreed on the other side, right? Just because one side says something, the other side doesn't. I haven't seen recognition that that's actually going to happen. So, we frankly, we've got to see. I would think we've got to see something in writing by Friday, or these headline grabbing trade wars, being over, positive progress blows up. And that was always a risk, right? I think again, I think both sides clearly want it. I think specifically in China, they need it for food. Their folks are paying more. I just saw another article that they have a swine problem. Swine fever has just wrecked their food, because it's like 75% of them got this bug or virus or whatever it is, and that's just horrible. So I think both sides still want a deal, but boy, we better get something on paper soon, or nobody's going to trust it or believe it. So, um, and I'm sure they're working on it, because you really haven't seen any negative jabs by anybody. So you would think it's working. Um, Next up, the banks. Bank of America being the latest to report positive earnings. You would have thought bank stocks took a hit in the quarter, right? Interest rates got whacked. You're paying less, but nope, they are, for the lion's share. I think Goldman's the only one that I read was disappointing. Was They're exceeding expectations. Bank of America actually credits the retail operations, which is the first time I've heard that in a while. Basically, they're upgrading stores, doing more for the consumer, and guess what? You treat the consumer well, they do more business with you. So good on them. Next up, Steve Eisman. And if you don't know who he is, he's the figure in The Big Short. If you don't know what The Big Short is, go check it out on Netflix or whatever it is. It's a movie about essentially the chaos of the last real estate cycle, and he was basically, there's a problem. There's a problem. These CDOs were toxic, and he called it, and he made a gazillion dollars on that, and he's earned the right for us to pay attention to, given that historic call. Um, he actually said two things that I thought was interesting. One is he does not see a severe economic downturn coming, which is awesome. Sometimes these short folks or negative folks are always calling for bad things, right? There's several people out there that the global economy is always just about to explode. Well, it's always been just about to explode for 50 years in their mind, and I didn't know if Steve was leaning that way. And as expected, he's not, right. He's a data guy, right? He's a big data guy, and he's just crunching numbers. So to hear him say he doesn't see a severe economic downturn coming is I, I I got encouragement by that. But as always, I want to figure out where his mind's at, and he did list his three short positions, because that's really what he does. He looks for companies that he thinks are overvalued. Most of us want to buy and see the stock rise. He takes the other side. He buys and hopes they fall. And his three biggest stocks on his list, or at least the three that he referenced, are Tesla, Deutsche Bank, and Zillow. Tesla's been talked about on this channel. Actually, I talked about it as being a need versus a want. And at least in the valley, I think the economy and all this stock money is disappearing. So who needs a Tesla? They're sexy. They're great. They're fast. But I thought that makes sense. I could see that. Don't know much about Deutsche Bank. I assume that's a call on the European economy, which, if you've been watching it like we have, makes total sense. And then Zillow. I took a quote, so I have to read it to you. He thinks Zillow is the most flawed business model he has ever seen. Ouch. Ouch. That hurts. So, you know, um, that hurts. That's saying something. The most flawed business model he has ever seen. So that's his opinion. I'm not giving mine. I'm just repeating what he said. So that was interesting. Next up, we saw some big real estate sales announced. I think they're going to complete by the end of the year. And specifically, we're talking about two casinos in Las Vegas. First off, Circus was sold for $825 million. That's a lot of money. And then it also looks like MGM is selling the land underneath the Bellagio. And essentially what that does is it values Bellagio at 4.25 billion. But again, the land is what's being sold. And then the operators, MGM in this case, is leasing it back. Um, which is an interesting model. So anytime I see these huge kind of iconic sales, I ask myself two questions. One, is this like the Japanese buying Pebble Beach? And what I mean by that, go look that up. I think that was in the 90s. And basically Japan was on their growth path and they were buying iconic things and frankly overpaying. And that's what I ask myself. Or is this an operator that's desperate and needs out? Hence somebody got a deal, right? So I'm trying to figure out which side of the equation it is. Is it overpriced and a buyer got silly, or is it an operator that's in trouble? Because when I see that, I go, okay, what side? And I don't see that in either case here. I think Bellagio is, they have a very attractive land that's not producing anything. They want to capitalize on that asset while it's highly valued and do other things. Circus needs a facelift, right? If you've been to Vegas, you know, I've been to Vegas 100 times more for work, right? Conferences and all that. It's always been the family casino for sure, but it's also been the, I don't know, the old and outdated version, right? So it needs a facelift, so it kind of makes sense, right? Either you want to take it on or someone else does. So I don't think anybody's overpaying, and I don't think there's an operator that really needs out. At least that's how I see it. Let me know what you think. What do you think about those two things being sold? That would be pretty cool. Lastly, I want to give a shout out to an NFL quarterback. I don't even know who he is, but I read an article. His name's Gardner Minshew. Hope I'm saying that close to right. He's basically a quarterback for the Jacksonville Jaguars. And the reason I wanted to highlight him is he is living the needs versus want equation. He's basically cheap, right? I would call him frugal. You might call him cheap, right? So he's a 23-year-old NFL quarterback, and he's still driving his high school graduation gift. Think about that. It's now a 5 or 6 year old Acura. His mother bought him as a high school graduation gift. He's an NFL quarterback playing on Sundays, and you know he's cheap. He realizes likely. Again, I've never spoke with him. I read an article, and I just think it's awesome, right? He's doing what he loves. He's passionate about it. He's working at it, but he's not letting that lifestyle get to his head because he knows his career is likely going to be short. I've read the average career is 3 years, so in addition to that, he's not signing up for any big expenses, right? You would think an NFL quarterback could go out and, get all high on himself, but he didn't even sign a lease until he made the team. So, good for him. So that's what I have for today. I hope it helps. We will absolutely talk to you tomorrow. Have a great day. Thanks.